Alrighty, hi folks, I am Becky with Enduring Finances. Welcome back to our channel, and if this is your first time joining us, we are glad to have you along. I'm going to jump right into it today because I've been talking about this a couple of months now, and that is, I did a swing trade recently, and I haven't done a lot of swing trades this year because I've been focusing on building up my dividend portfolio, but I did one with an IPO. So, before we jump into it, let's make sure we're on the same page with what an IPO is. In layman's terms, an IPO is just the first time that a company is offering stock to the public for you to purchase. So there might have been private angel investors behind the scenes of this company since it started. Now they're going, hey, public people, would you like to buy a portion of this company, invest money in it, and potentially see a return in the future? So that's what's going on here. So on February 10th of this year, I invested in Black Rifle Coffee Company, which is ticker symbol BRCC with the New York Stock Exchange. Now let's tell you a little bit about Black Rifle Coffee Company before we jump into it. They have a very well established public following with millions of followers off various platforms, and they put out a lot of really funny and engaging content. So I highly suggest, even if you don't like coffee, to take a look at their YouTube. I'll link it here for you to see their kind of introductory video of who they are and what they stand for. They're fantastic. So Black Rifle Coffee Company was founded by veterans, and the majority of their employees, I think at least 50% of them plus, are veterans. And one of their big initiatives in the future is to hire over 10,000 veterans, which is something very near and dear to my heart because a lot of veterans struggle with the transition from military life to civilian life. And this organization is not only providing good coffee to a lot of people, but they're also focusing on this group of people that is a family. These are brothers and sisters that have served together and are now coming together and creating a mission for more people that are struggling to find that. So they develop, I'm going to read their mission statement for you. So we develop our explosive roast profiles with the same mission focus we learned as military members serving this great country, and are committed to supporting veterans, law enforcement, and first responders. With every purchase you make, we give back. And they did that with the IPO. I think it was like 10,000? I might be off of my numbers here, but they actually donated shares of their stock at the IPO. The BRCC fund, which is directly providing support and grants and resources to veterans in the community that need help and need support, and they are an outstanding organization. Highly recommend that you take a look at them. Now, let's get back to their IPO and the finance side of these things before I go off on another tangent about how great this company is. So, on February 10th, I bought 2 shares of their stock for $15.76 a share. Let's kind of take a look at what happened with their IPO. They started on Thursday, February 10th. Their stock price was at $15.64 at the end of the day. And then it slowly was right around there for the first couple of days, and then it started to increase by the middle of February, about a week later, and jumped up to almost $19, almost $20 a share. Then we get towards the end of March and things start picking up, and about that last week and a half, 2 weeks into March, and we start jumping from $17 a share to $19 a share. And we had our first real big spike on the 4th of April. And it jumped to over $28 a share. And then we saw a pretty sharp decline, about $4 the next day, and then a slow increase again until it tapped out at over $33 a share. And then it's been declining since on April 11th. As of yesterday, their share price of April 27th, I should say, as of April 27th, their share price was sitting at $15.71 a share. I checked on April 4th and I saw that the stock price had jumped all the way up to over $28 a share. And so we're getting close to like 80% return on this, and 88% increase on this. And I was talking to my buddy about it. I was like, I really like this company. He's like, you should sell. It's like, I really like this company. Like, I want to hold on to this company. He's like, you should sell. And I was like, So I thought about it. For the next couple days, I thought about it, and I realized that I was playing off of my emotions in this position because I am very passionate about this company's mission, and that was guiding me in this particular situation to be stupid a little bit, maybe. And so I realized that, and I was like, you know what? This company is not offering dividends yet. My sole purpose of this portfolio right now is to be dividend growth, and they're not returning a dividend. And so I would essentially be keeping money in this position that I would not see a dividend return on, which is my goal for this portfolio. And I could invest that, $30 into a different company and see a dividend every single month. And so those kind of added up, and I decided that I was going to sell. So I put in my goal for the trade on the amount of money that I want to sell them at, which was $31.44 a share. 1 week after April 4th, so April 11th, the stock price just bloop. I hit it. I sold my 2 shares for $31.44 a share. And the share ended up topping out at like $33.32 that day. And then we saw a very big decline in the price. It dropped like $3 the next day, $4 the next day, and like another $3, and it just kept going and plummeting down. And so as of yesterday, April 27th, the stock price was at about $15.75 a share, so a penny less than what I bought them for 77 days ago. All in all, I had these 2 shares for 61 days, and I made $31.34 off of the sale, and it cost me 2 cents in fees through my brokerage account to do this trade. And so all in all, I made $31.32, which is just under 99.4% return in about 60 days. So I put it that high. I put the price up 20%, essentially 20% more than what the initial price was at that moment. And I did that because I really like this company, and either way, even if it wouldn't have hit that 100% return, with the fees and everything, I would have been happy to keep this company because I believe in this company and I think it's going to go very, very far for a long time. It just isn't matching up directly with my personal investment strategy with this specific portfolio. So in future state, if they follow along this course and keep, giving the returns that they're doing as far as company improvement and growth and sales and all of that, I will happily invest in this company in the future state if they do dividends or if I adjust my personal investment strategy. But for right now, I'm 100% happy with my trade and what it did. So that's what happened with the trade. I'm happy to make my $31. That was, a quick return, better than most dividends that I see. But I want to make sure that you all are aware that investing IPOs is pretty risky. There's not a lot of, concrete paths that the IPOs are going to take. Some of them go very well, and some of them crash and burn, and you can lose a lot of money when you invest in IPOs. And so I think it'd be good to take a look at a couple of other IPOs that happened. So I picked 2 that happened in 2019 that you might be familiar with their companies. So the first company that I want to look at is an example of how an IPO can go wrong. And so this company is Lyft, which is, competitive to Uber. You might take it to get somewhere. And so they opened in March 24th, 2019 at $78 and something cents a share. And then they quickly plummeted. And I mean, they dropped way down to the point where, as of yesterday, their stock was valued at $32.33 a share. So a significant drop of, $40 odd over the last couple of years in their stock price. But that's not the full story. They have been up and down and up and down and bottomed out, below $30 a share over the course, and they really haven't had a positive flow with their stock price. It has been continually falling, except for a peak that happened, a couple months after they did their initial IPO. But if you had invested in them and not gotten out, if you had invested in them at the IPO, you would have lost money. You still would have lost money. And so they're a very well-known company. People use them all the time, and their IPO did not go very well. They lost significant amount of money even at the very beginning and to this day. So another company that we can take a look at that had a positive IPO, well, positive-ish, that you're probably familiar with is Zoom. Now, we all saw this like boom during the pandemic and everybody was all into it. A lot of companies bought into it to do virtual meetings and everything, and so it had a very good year at the end of 2020 and 2021. So there's a little bit of a bump in there. But they opened on April 15th, 2019 at $65 a share. And as of yesterday, April 27th, they're valued at about $99 a share. So they had a pretty decent increase over those time frames. They were pretty stagnant a little bit that first year of their IPO, and then they started to grow in 2020, and they spiked in October 2020 to almost like $560 a share. And so if you had held that entire time, it was a beautiful moment to sell, and a lot of people did. And so we've seen a decline since that in October 2020, and they've kind of flatlined a little bit in the past couple of months. So with Zoom, if we take out the fact that the pandemic happened and kind of skewed what would typically happen with a company's IPO because they had such good profits and took an opportunity when the pandemic was happening and people were on remote and they needed ways to communicate, like they were there, they were prepared, and they were ready, and they took that opportunity, which is why their stock price jumped up so high and has leveled out now that people are starting to return to work and other companies have jumped into that market and kind of come into as bigger competitors. But I think overall, this stock has done pretty well for an IPO. Like personally, that's my opinion, from like $65 a share to, almost $100 a share in a couple of years. That's growth over time. And I would not be surprised to see this company continue to grow. So I would say that's a good example of a company that had a pretty good IPO as far as increase in your money invested initially. I think IPOs are a lot different than you would look at buying into a long-term company, like a long-term investment with a company that's been established in the stock market for a long time, because it is so volatile in those initial months, those days, even hours, days, weeks, months of when they initially go public. And part of that is because the stock market, actually, they evaluate the company and they put them in the stock market for the initial IPO a little bit below what their actual good value is for the company. And so you can get a discount if you buy them when they first go public, like within the first few minutes of them going public. And a lot of people jump on that. A lot of people also like to do day and swing trades with IPOs. So exactly the thing that I did, a lot of people like to do this because they can make a lot of money. It's very lucrative, it's very risky, but you can have a high return with a large amount of money that you can make, or you can have devastating losses because if you were to invest in Lyft and expect it to go up 100%, you would probably still be crying. Another thing that keeps IPOs a lot more volatile than other investing strategies is because one of the reasons that companies do an IPO is not only to gain capital, like Black Rifle is trying to do, or increase their media presence because there's a lot of publicity and people are talking about it and there's buzz and you can get a lot of people interested in your company. The third is because those angel investors, those initial investors, may be trying to leave this investment behind. And so they're typically grandfathered a portion or equity. They're typically grandfathered equity or shares of this stock. And the SEC has a 90-day window minimum where they cannot sell those shares. And once that 90-day window or 180 days or whatever it is specifically for that IPO happens, they can sell their shares. And what can happen is they can sell and it can just drop immediately, because if they hold a significant portion and it starts dropping in price, the market just follows that in a very quick succession. And so there can be a lot of ups and downs and moving within an IPO that you wouldn't typically see with just the day-to-day increase of a company in the stock market. And I think being able to manage your emotions, realizing that you are emotionally trading your stocks, you're not investing your stocks, you're investing off of your emotions, is so important, because if you see your stock go down and you sell, you could lose because it's going up and down like this crazy. or you could miss out on seeing that return because you're so invested emotionally in the company or with making, 150% return, that you could miss it and make nothing and lose money in the investment. I think a good rule of thumb with any investment that you're going into is don't invest more than you can afford to lose. So if you're living paycheck to paycheck, don't make a risky move that you can't afford to lose the money. If you have $500 that it doesn't matter, you can pay your bills and get through, you can invest $500 and not worry about losing it per se, within reason. You know what I mean. And I would say trust your gut and try and make smart decisions that are not based off of the emotions that you feel with the price going up and down and fluctuating. And if you really want to invest in a company long term, probably best not to invest in their IPO at the very beginning, because if you miss that initial window of the discounted stock price, then you're going to be stuck in this up and down craziness of people buying and selling and waiting for their turn to make money. And you could essentially lose money or buy it when it's overvalued and then hold it for a long time to even make up for those gains. And so probably a good idea if you want to invest in this company, like if you want to invest in Black Rifle Coffee Company, I would recommend waiting a few more months. We haven't hit that 90-day window yet. Maybe in the next month or 6 months or maybe next year. If you really like the company, then you can invest in them and hold them in a long-term portfolio. Hopefully you have learned something from this. I was excited to see this happen. I've done swing trading in the past, and to see something hit 100% return minus the fees was actually really exciting and exhilarating. And if I wouldn't have put my marker in at that point, I probably would have missed it, because it was only one day where the stock price tapped out at the top. It ended up being very good for me, and I'm hoping that maybe in the future they will offer dividends. If not, then maybe in the future my investment strategy will change and I will invest in them. I would say if you like coffee, give them a try. They have a club program. You can go in and get reoccurring orders of coffee for you, and they have all types of perks and benefits and stuff you can wear. I can't remember, shirt, apparel you can wear. And I guess I should say I am not sponsored by them. This is not a sponsored video. They are not asking me to do this. They're not paying me to do this. They don't even know that I'm doing this. I just really like this company, and I think they're doing a lot of great things. So I think that's it for me, guys. What a great return on 61-day swing trade, even though I was anticipating to be swing trade, and happy to see that 99% return off of this investment. So I will catch you next time, guys, and be smart.